what's up everyone? Welcome back to my channel. It's your boy Maurice Mo with more investment solutions. You guys, we're still living in a pandemic situation. I hope you guys are staying safe. I hope you guys are wearing your mask. I hope you guys are washing your hands, and I hope you guys are social distancing. Here in California, we have literally surpassed New York when it comes to our cases. So I'm hoping that we are all staying safe. It's all about being courteous to others. That's all that matters. Those of you that are new to my channel, please subscribe and hit the like button down below. I will definitely appreciate it. For those of you that do not know, I am a long-term dividend investor. What that means is I invest in stocks that actually pay me a dividend no matter what. That is how my stock portfolio was built. I started my portfolio about 2.5, almost 3 months ago with just literally $500. Right now it is sitting at $6,000 because I'm investing aggressively during this pandemic. That is the reason why my portfolio has grown so quickly. And for me, it's all about compound interest and compound dividends. So what I'm doing is those companies that I'm actually invested in are actually paying me a dividend, and I'm taking that dividend and reinvesting that dividend right back into my companies, and that is creating a snowball effect. That is the reason why I decided to actually make this video. Right now, the pandemic has literally changed our lives. People are at home. Kids are at home. These people that are at home actually still have to go to work sometimes. And what they are using is the Zoom app. Zoom is actually a great stock to actually invest in right now. Right now, it has literally grown 168% since the pandemic. That is crazy. It is selling at $261 right now. That is a crazy number. But for some people like myself that are only strictly dividend investors, I can't invest in Zoom. Why? Because it doesn't pay me a dividend. And for me, I am a long-term dividend investor, so I had to stay away from Zoom stock. What it did for me is send me on a research rampage. I need to figure out what are the alternatives to Zoom that actually pay a dividend. And I found 3 different stocks that are actually alternatives to Zoom. 2 of them actually pay a dividend. And those are the stocks that I'm going to be talking to you guys about today. And the last stock that I mentioned today is actually going to be the stock that I'm actually already invested in, guys. So stay tuned. Watch the whole video for that. So the first stock I'm going to be talking to you guys about is Google. Google is definitely a great stock to actually invest in. Now, it doesn't pay a dividend, but it is a good alternative to Zoom. Google has Google Hangouts, and it actually has Google Hangout Meets. So the difference between the two is Google Hangouts, you are allowed only up to 10 people to actually video conference call. Well, Google Hangout Meets actually allows 100 people to actually have a conference call. The cool thing about Google Hangout Meets, you don't even have to have a platform to actually use it. You can use it literally on a browser. But if you have a mobile phone, they actually want you to actually use the mobile phone because it actually makes it better from your interactions with the next person. Another thing that Google Hangout Meet actually has, it is definitely compatible with Skype. So if somebody does have Skype, you can also, by using Google's platform, which is Google Hangout Meets, you can actually interact with that person as well. So that's a great feature to have. So right now, Google is actually selling at $1,583.80. That is a very expensive price, especially for my blood. I'm not gonna just put $1,583 into the stock like that. But if you do have fractional shares, this may be a good stock to get invested in, just hopping in, and then when it goes down a little bit, dollar cost average down, and continue until you're able to buy 1 full share of this stock. Right now, this is not a stock that even pays a dividend, so I'm definitely not interested in this stock. The second stock that I'm going to be talking to you guys about does pay a dividend, and it's actually a really good long-term investment stock. It's Microsoft. Microsoft has a face-to-face interaction when it comes to their company. So this is something that you may want to look for. What it has, it's Skype. Skype has been bought by them with $8.5 billion back in 2011, but Skype been around since 2003. So what does that mean? That means it had a lot of time to come up with different features that help the value of the company. Skype came up with the Meet Now feature, which supports the video chatting feature. It also came up with features that you can blur the background when it comes to your interactions with other people. So what that tells me right now, Microsoft is a great company to invest in when it comes to being an alternative to Zoom, because it increased by 70%. That's crazy when it comes to face-to-face interactions on Skype. So that's something that I would be looking into if I was going to be increasing my portfolio and making it a little bit stronger and still getting paid a dividend so I can reinvest those dividends. The next stock is my gem, guys. This is the one that I'm actually invested in. But before we look at that, let's go check out what Microsoft is actually selling for. Microsoft is selling for $207.01, guys. It actually took a pretty nice little dip today, so I would think that you'll be getting it at a good, decent price if you're going to be paying $207 for it. It has a dividend yield of 0.94%. That's a pretty decent dividend yield when it comes to actually buying a stock that's worth $207. That's not bad at all. So the gem that I was telling you guys about is called Cisco. Cisco has Webex. Webex was bought by them back in 2007, but what makes this company unique, Webex been around for 2 decades. This is a company that's shown me longevity. So this is something that I'm looking for when I'm trying to invest in a company. This company actually made Webex a free platform to use when the pandemic actually hits. When the platform is free, more users are going to want to come and use their platform. And it actually increased a couple of features as well. You were only able to have 50 different people that were on these conference calls. Now you're able to have 100 people on these conference calls. And remind you, this platform is actually encrypted, so it's a very safe platform to use as well, even if you do have 100 people. Another thing that they actually did was they increased the amount of length that you were able to be on these video calls. Usually it was only 40 minutes. Now it is unlimited. So what that tells me is they are getting smart. They know that people are going to be using these video conference calls. People need it, kids need it, people are at work. And this is a company that's actually saying, you know what, we're going to make things free and we're going to bring these people in. So let me go over the pricing with you on what Cisco is actually paying right now. So I'm invested to this company, so I'll let you guys know exactly what they're paying me and how it's working as well when it comes to their dividend. Right now, Cisco is sitting at $47.07. I have a total market value of $377.89 invested. My average cost I got in at this stock at $45.34, so I have a total return of $13.89. My dividend yield on this stock is 3.0%, and right now I actually have a dividend pending of $1.94, so that's a really great thing. This dividend actually pays me quarterly, so at 8 shares I'm getting paid $1.94 every 4 months, so that's really good for me. So that's all I have for you guys today. This is the alternatives when it comes to the Zoom stock. If you don't want to get into Zoom because it doesn't pay a dividend, you can actually get into Cisco or you can get into Microsoft. These are great companies and long-term companies. One more thing about Cisco I wanted to show you guys. The reason why I felt like this stock was actually a really good stock, if you look at the 5-year date, it's awesome. It's all in the green and it continues going up. To me, that shows me that this is a great long-term investment. Even if it is down a little bit for the day, at the end of the day, it will continue to grow because this company is a pretty strong company. So I'm definitely going to stick with this company, and I'm definitely going to be dollar cost averaging down in these shares. So I'm trying to get more bang for my buck. I do believe the stock market will have a turnaround. Like I said, it does increase 7 to 10% annually. So we got to take advantage of the stock market now. Find those alternatives and invest in these dividends, guys. Reinvest these dividends and continue to build a strong, healthy portfolio. If you have any questions or if you have any other companies that you may want me to look at, hit the comment section down below. I'll definitely appreciate it. I'm out of here. Peace.